Hello, everyone. Welcome to the stream. I'm just doing a few sound checks. I haven't done a stream for a while on my own channel here, so I'm kind of getting used to it. Just checking all the sound. Welcome to everyone. Thank you so much, Emily Trading, for the super chat. I really appreciate that. Thank you so much. It's much appreciated, and thank you so much. I much appreciate the support. Please bear with me, folks, while I get the setups going here. I'm streaming in HD for the first time as well, and I believe you can stream on 4K here on the new StreamYard software, so that's pretty exciting. And yeah, so we're going on HD today. So welcome to everyone in the chat. We are just a little bit early, but I'm setting everything up, so we're going to go through a few checks here if you don't mind. So just make yourself at home and say hi. Make sure to subscribe and like the channel and the chat and everything like that. And I will check the settings while you're settling in. I'm just going to check the audio settings. That all looks perfectly good. Hello, Marcin. Nice to see you, mate. Always good to see you. Now, let's see if we can get something up on the stage here. All right, charts are running. That's good. Good day, Aman. Yeah, I'm back. I'm back, Aman. Don't worry. I'm going to tell you all about it shortly. I'm going to be on every week and some. So we'll talk about that shortly. I had some work to do and a bit of a holiday, bit of a hiatus, I suppose, and some other contract work I was doing for another company. And I'm still doing that, actually, but I'm not. I no longer want to neglect my wonderful viewers here at ArcisFX. So, good day, Craig. Nice to see you, mate. And Emil, all the lovely old names. And Tamer, Farid. Nice to see you, Tamer. And Eduardo, my favorite, Eduardo, with a wonderful name. Yeah, so we're going to start shortly, folks. Good day, MD. Nice to see you too. Nice to see everyone. It's really good to be back, and I'm really happy to be here with everyone. I'm a little tired today. I've had a really busy couple of months doing not only some work for the other contract firm, but also some ArcisFX work, and of course in the private group as well. We're doing a lot of trading currently at ArcisFX. So if you'd like to join us in the private group, there's a link below. We'll talk more about that in a short while. So good day below, Burke. Nice to see you too. Nice to see you. I haven't seen your name before. I'm going to just check out these charts quickly and see if we can find the best view here. That one makes me a little too small, maybe. That could be a little bit better. But until we start, let's go with a full page view. And we've got a lot to get through today. So yeah, we'll talk about natural gas. We'll talk about metals. We'll talk about crypto. We'll talk about stocks and energies and all sorts of things. NatGas for sure. Good day, Ole from Germany. Nice to see you too, mate. And Vishesh, unusual name, Vishesh Agarwal. Nice to see you, Vishesh. Folks, we'll be starting in about 4 minutes time. So grab a coffee. I've got my Red Bull ready, and I've got my charts ready, and we're going to be talking about a whole bunch of stuff. Lots of interesting things to talk about in the markets as we approach we're well into the third quarter of the year. As we move into the next part of this third quarter of the year, October seems to have been largely neglected for the crypto people, but maybe it's just beginning. And of course, we've seen October in gold and in stocks. So where are those going next? These are all the questions we have to be asking at this point of the time as we near the end of the year. So folks, I'm just going to once again check my charts, see if we can get this up here running nice and smooth. And I think that's okay. I'm going to scroll through my charts very quickly. Currencies, stocks looking bullish. Metals, are we reaching a top? Bitcoin, etc., all getting a bit of a bid today rather nicely. And we have an interesting observation about Bitcoin regarding the Quasimodo pattern, which I'll talk to you a bit about shortly. And then, of course, natural gas bouncing off its megaphone bottom and rallying up quite sharply, along with oil, maybe trying to find a bottom too, actually. So lots of stuff going on today as the markets are about to open in a few hours' time. And we need to have a game plan. That's the whole point of these Sunday evening for my time, morning in California, and probably Monday already in New Zealand and maybe Melbourne and Brisbane. I'm not sure. I think 8 hours, not quite, almost though, almost tomorrow, almost Monday in those parts of the world with the Asian session beginning. So let's go back to the big screen while I'm waiting for everyone to come in. There we go. So welcome to everyone in the chat. It's nice to see you all. And Gigawatt, nice to see you. And thank you once again, Emily Trading, for the super chat, which is fantastic. Thank you, Emily. I really appreciate that. And folks, if you'd like to ask a specific question, there's a box next to the typing box on your YouTube screen. There's a, where you type, there's a smiley face. And right next to that, there's a box where you can click and send me a super chat for as little as $1, I think. And if you'd like your question to be notified and put up and attended to by me, you'll have a better chance of doing that with a super chat. Not that I want your $1 or anything like that, but it does help you get noticed, just like Emily Trading over here. So send us a super chat if you've got a specific question. Folks, we're starting in 1 minute's time. So I'm not going to get my charts up until we get to that point, and we'll leap straight into it. Good day, Craig. Yeah, it's good to have Gigawatt here for sure. MD, question, can you check MSTR? Looks like it's forming a potential triple bottom. Yeah, MSTR likes triple bottoms, MD. I'm long on MSTR strategy. And Bitcoin breaking down below that level. Yeah, we'll talk about Bitcoin and the Quasimodo pattern shortly when we get into it. We're going to start in a minute's time. So stay tuned. Ole from Germany, nice to see you. And I'll just click up some of the greetings. Lovely to see you all. And Eduardo, Tamir, great to see you. Emil, Craig, Emily Trading, A-Man, Marcin, everyone in the chat. Wonderful to see you all. Thanks so much for being here. I really appreciate it. All right, let's make a start. So folks, before I start with charts, I'm going to go through a few announcements. We have officially started the live stream. So the first announcement is that I will be doing this video every Sunday at this time going forward for the public. So make a note in your diaries. For this time, it's my time, it's 6:30 p.m. I don't know what time it is in your country, but whatever time that is, make a note of this and make sure that you've clicked the subscribe button and make sure you've clicked the bell that's next to the subscribe button so that you get notifications. And if you do that, you will get an email and a notification on your page or somewhere on your computer when the live stream begins, just in case you forget. So make sure to like and subscribe. There will be this video every Sunday from now on at this time of the day. The other thing is, if you join this channel, and you can join for about $1 as well, maybe it's $2 now, inflation. Let's say it's $2. You can join this channel, and I'll be doing an additional video alongside, potentially with Paul, Crypto Paul, or by myself in midweek, probably on Wednesdays, every Wednesday. So if you'd like to see a video from me, not only this public one on a Sunday, you can watch my videos on a Wednesday too, by joining this channel. There's a button below the video, the join button, and click that button. I think about $1 or $2. So that's that out of the way. And if you've got any questions about that, let me know regarding that. Mark, nice to see you too. And Chesek, nice to see you. And Ray, would I be a buyer of WTI? Maybe, Ray. Yeah, we'll look at WTI shortly. And John Brennan, always nice to see you. All right, folks, now all of that's got out of the way. I'm going to paint for you a sort of a macro picture of what I think is going on, and then we'll go straight into the charts. So actually, maybe I'll just start with the charts alongside and then talk about it as we go. So let's get those flashed up. I'm going to go through the charts from left to right, starting with currencies. Now, dollar is trying to find a bit of a bounce. I'm just going through general themes now. We'll come back to all of these charts. Dollar is trying to find a bit of sort of some footing at its moving average cluster right here, as is the Japanese yen index as well. So we've got potential support for the Japanese yen and potential for the dollar. Now, I'm pretty ambivalent about where currencies are going to go. I'm not particularly excited about any of them really, but I do think there's a chance on one or two pairs. One of those is the Australian dollar, which I've just bought on Friday, and there are one or two other pairs. We'll come back to it. But the general idea in the dollar is that I think the dollar will continue to try to preserve its strength, but it will gradually dribble down. I think before that happens, though, we may have to get back up to about 100, maybe 102 on the dollar index. This is the dollar index, and there's the 100 level, 100.2 at the top of the yellow block. I think we might have to get up to the 200 period moving average and this previous swing high over here before moving down. I don't know. but I'm pretty ambivalent. You can see the dollar's been moving across the page sideways for most of this year. Well, most of this year really. So we have a high of range at about 102 and a low of range at about 96. I think we're going to tend towards the bottom of the range, but we may have to go higher. So keep that in mind, and keep that in mind also when you're considering trades that may have on, for example, like the Australian dollar. I think this is, and generally I quite like the commodity currencies, and that would include the loonie, the Aussie, and the ZAR. And they're all been showing a little bit of strength. And I think the Aussie is the one that I like the most. We've bounced off the 20 period and we're trying to move up. I think we've got to reclaim, excuse me, this trend line. It's time for Red Bull. And this is the apricot edition, if you like Red Bull. It's a rather foul flavor, I think. But anyway, I like Red Bull. So, and it kind of keeps me going. So, excuse about the froggy throat. It's going to carry on throughout this session. I'm not going to keep carry on apologizing. We bounce out of the 200 here, and I think we can reclaim this trend line in what looks like a falling wedge pattern here on the Aussie. That's my favorite play at the moment. We are already long, and we're already in profit. That bounced quite nicely on Friday out of that support level, the bottom of the falling wedge triangle type pattern, and making a double bottom actually quite nicely. We got long right at the bottom on Friday. So that's one play on currencies. But generally, I'm not particularly excited about them, actually, to be honest. Now, going on to stocks. Now, my general idea is that I've consulted many people that I know, and I've watched a bunch of YouTube videos from people that I also know who I consider to be respected analysts, and I've also made my own judgment. I think we're entering into what's known as an inflationary bubble. In other words, we're going to see asset prices increasing, and we're going to see inflation potentially take off. I know this is not a popular view. Rather than a deflationary bubble like we saw in maybe 2008, 2000, I think an inflationary bubble leads to massive surges in asset prices. And we've seen some of that already in gold and silver and stocks. Here are the stock markets. I think we've got a lot more to go on the NASDAQ and the S&P. I'm long on the NASDAQ, and that's my entry point at the green arrow. We got long yesterday, not yesterday, Friday, may as well be yesterday. And I think I'm aiming for the top 200 period Bollinger Band and the top channel line and my blob at around 26.5 and maybe as high as 26.8. Let's zoom this in and have a closer look. Now, what I mean by an inflationary bubble is that asset prices increase dramatically as inflation increases, and then we reach this sort of blow off top. I don't think we've reached that yet on the NASDAQ or the S&P or any of the stock indices. And I think there's still some way to go for the AI boom or bubble, if you wish to see it like that. If it is a bubble, I don't think it's at the end of the bubble. And if it's a boom, we're probably only just getting going. And this is probably a very unpopular opinion, because most people think that we're entering into a very difficult phase of the market and that we're going to be seeing, market collapses and all sorts of chaos erupting as we go into these blown out markets. But I think we may only just be starting. What we see on the page here on the NASDAQ is a Zweig breadth thrust. Go and Google that. I'm not going to explain it right now. It's a Zweig breadth thrust. It's only happened, this is the 5th occasion in history, I believe. And I'm pointing at the wrong chart. We should be looking at the S&P. The same rules apply though. And what a Zweig breadth thrust means something, there are different definitions, right? But something like a 20 to 25% drop, followed by an immediate recapture of those losses, like we saw here. And it's normally followed by a 20%, well, let me caution a little bit, a 10 to 20% rally thereafter. Now, if we take 20%, let's go for the maximum from the top of this exit point of the Zweig breadth thrust. I don't know where that would be. 22,000, 10% would be 2,000, 20% would be 4,000, 4,400 actually. So if we add 4,400 onto 22.2, we end up at 26.5. And that's exactly where the top of this channel line is, and the blob at the 200 period Bollinger Band. That's where I'm aiming for. And I think once we get there, and it might take, a little bit longer than where my blob is positioned, but I think if we get there, there's a better blob actually, probably more like the green blob. Let's move this one along. I think I've got the one there because the top 200 Bollinger Band's right there at the moment. But I think more like that, and that would take us right until the end of the year, and then potentially we might see this market moving down. That's closer to 27,000 than we are right now, closer to 25,000. This is what it looks like on the long term. And I'm looking at that long red trend line that you see on this page. It's actually the original channel line that we fell out of with that tariff day sell-off. We've bounced back in with the Zweig breadth thrust. And the Zweig breadth thrust measurement target plus the target of the channel plus the top 200 period Bollinger Band takes us up to about 26.8, 26.6, 26.5, maybe 27.2 if we get a blowout through the top of the channel, which is quite possible. So somewhere around 27,000. I think that's what's going on stocks, and I think we'll see the same on the S&P, and we'll see it on the US 30, and we'll see it on the German 30. I've only got longs on the NASDAQ and the S&P right now, but I will be looking to get long, and I'm going back to the questions very quickly, just to make sure you can all hear me. Please type it up in the chat if you can hear me well, and if you're following this show. So nice to see you too, Jazz, and Manatee, and Emily Trading, and Roby. It's lovely to be back with everyone. So let me know if you can hear me. Quickly type that up in the chat, and I'll come back to the chat shortly. Okay, wonderful. Thank you, MD. Much appreciated. Now, the German 30 is another one that I had my eye on. And if you are following me in the private group, you'll know that I was actually long on this one earlier. And we exited, I think, just with a small profit, maybe at break even. But I have a feeling we took a profit on the exit. Look what happened on Friday. Beautiful move down, almost to the 78.6 fib. Not quite, but almost, but certainly through the 618. And then bouncing back and closing above or amongst the 50, 100, and 20 period moving averages in this cluster or confluence. And I think that this is a reversal candle. I'll be looking to buy on dips for a new rally on the German 30. German 30's got a flat top breakout. We've tried twice to get through the top, and we failed twice. But I think on the third occasion, if we try one more time, I'm not saying we will, we'll probably get through and move up to the next level. Next level, similar to the other ones that we looked at, top 200 period Bollinger Band. And that would take us up to 26,000 on the German 32. And actually, we could go a lot further because this breadth thrust on the German 30 would take us up much, much higher than this flat top breakout projection. So German 30, NASDAQ, S&P, Dow, and probably even the Nikkei. So anything that's looking like it might be moving up might be a good chance to buy. I'm already long on the NASDAQ and the S&P, and I'm also long on strategy. Now, someone's just asked in the chat about strategy. Let's have a look at it. Now, it looks like a very bad picture for me because I got loads of long positions on here, but I see this as and these are not large positions. I still haven't added as much as I want to, but these are tentative building positions. I think we've got a long way further to go on strategy. And I think we're just sort of consolidating in a very large and messy, admittedly, bull flag. If we switch this to a logarithmic scale, it looks a wee bit better, doesn't it? That's a log scale. And if we switch that back to a normal scale, you can see it just becomes more difficult to understand. So let's go back to the log scale. And you can see in this sense, it just looks like a bull flag. And I think we're at the bottom of the bull flag. Not quite. We could get down to the Bollinger Band, which is at about 229, maybe 230. But we are trying to hold here. It's a pretty important level. And you did ask in the chat about triple bottoms. Yeah. So last time we got long on strategy was there at that triple bottom. And at the same time, actually, we got long on Tesla on the same triple bottom. Let me show you over there. Triple bottom on Tesla. There's another triple bottom on Tesla. And do we have another one? Probably not. No, I'm long on Tesla. Oh, no. Am I long on Tesla? No, I'm not yet. Oh, yeah, I'm long on Tesla. Yes. Of course I am. So coming back to strategy, yes, some of these stocks like double and triple bottoms, but particularly strategy and Tesla. There's the first triple on strategy, MSTR. And you're asking, do we have another triple bottom? Well, I don't know. I suppose. I'm not sure I see a triple bottom here. Maybe on the 4-hour chart. Let's have a look. No, I don't think so. 1 hour, 15-minute chart. Can't really see a triple bottom. I'll come back to that question if you remind me. I think that was MD who asked. But sure, if you consider that to be two bottoms, maybe this is another one. And it's possible we have to get down to the lower 200 period Bollinger Band. If we don't do that, if we don't get to the lower 200 and that triple bottom, it means that actually it's pretty bullish. And we'd be bouncing out of the 786 fib rather than having to revisit the bottom of the channel again. I think we'll move back up to the 200 period Bollinger Band at the top here, these highs, and the high to the left here, all the way up at 530. And the price is so discounted now, half of what it was going back to exactly this time last year, all right? This time last year, we were double the price on strategy. So I think it's cheap. And I don't think this company is going away anytime soon, although I have misgivings about treasury companies in general, Bitcoin, Ethereum treasury companies. And not only the fact that they're hoovering up all the Bitcoin, Ethereum, XRP, and all the rest of it, but because they're actually actively manipulating the market and forcing retail traders like you and me to basically give up our Bitcoin to put into their wallets. I don't like that. I think it's wrong. It's not one person. Some of them are working together, I think. Some of them are acting alone. Some of it's collusion. Some of it's just, BS. I don't know. Whatever we've been seeing on Bitcoin, I think is orchestrated. And I think Paul, if you're watching, Crypto Paul, thank you very much for your contribution to this channel, Paul. I really appreciate that too. And I know that many, many of the viewers are enjoying your crypto content. So thank you very much. And if you'd like to join Paul for his crypto content, make sure you subscribe to this channel, because Paul updates on alts and Bitcoin, all that stuff. And we're right in the beginning of the crypto alt season right now, or altcoin season. So if you want to know more about that, it's a good idea to subscribe to the channel and potentially join. If you want to see my videos every Wednesday, you have to join the channel. These ones on Sunday are for free. Well, it's not that it's expensive, right? It's $1 or $2. Anyway, so that's what I think. An inflationary melt up. I think we're going to see it across all the stocks. I think we're going to see it on, let's come back to metals. I think that might be a bit different. And then I think we're going to see it on cryptos. Now, this is Bitcoin, Ethereum, XRP, and Solana, and they're all bouncing today. Now, like I said, let's go back quickly to strategy. I want to draw a parallel here. Here's strategy, not reaching the lower 200 and bouncing off at 786. All right, keep that in mind. Now let's go to Bitcoin. Strategy is a Bitcoin treasury company, Bitcoin only. Bitcoin got down to its 786 and bounced out of there without reaching the pattern bottom. Now I thought we would have to get all the way down here. We got down through the 200, and I have to eat some humble pie, or as they say in the US quite a lot, I am going to have to eat some crow, in that I said that this green trend line would never be broken again. So right, I actually said that. It's still up on X as my main posted tweet. Go and look at it now. And if you're not following me on X, folks, go and find me on X at ArcisFX on X, Twitter, where I post stuff almost every day, several times a day. And I said this trend line would never be broken because we've entered an institutional era in Bitcoin. And I don't think that we're going to see this sort of to the left side of movement any further. I think we're going to see a trend type movement, and that these cycles are possibly or potentially ended, and that we're just going to be trading in an ever increasing upward trend with far fewer pullbacks or basically complete collapses like we've seen before. So you can see it does look more structural, but we've now broken down through my trend line. I'm going to have to eat that crow and not crow about my predictions. I don't make predictions. I get things wrong way too many times to do that. So here's my megaphone pattern where I thought we could get to the bottom, but we got to the 786 and we bounced out of there. I think this melt up that I'm talking about, I think we're going to be seeing the money printers turn on. We know that. Jerome Powell's already said it, that quantitative tightening is coming to an end. Quantitative easing. It's difficult to say it even. Printing of money, basically, is about to start. Interest rates are going to drop further. Investments are going into AI, power stations, massive mega plants to power data centers, AI, Bitcoin mining. It's all happening at the same time. And of course, sadly and interestingly, I suppose at the same time, we've just seen heightened, increased and bloody tensions in Gaza. And unfortunately, whenever there is escalation in war or new wars, we often see the markets begin to rally. There are all sorts of companies that profit from war, including AI companies and all sorts of companies. Probably Bitcoin benefits from it as well. And you can see Bitcoin bouncing today as those hostilities began again. Very sad and horrible. don't really want to talk about war. I don't like it at all. I'm very against war, adamantly. I'm pro any leader, political leader, who's against war. And yeah, so let's leave it at that. So I think that inflationary melt up or bubble, or more like when I say melt up, I'm actually being a little bit euphemistic. What I mean is an inflationary bubble or even a blow off top that we may be seeing coming up. And I think Bitcoin and the altcoins as a result of that will be amongst the main beneficiaries. I'm still long on Bitcoin. I have a hedge position at 109 where I hedged half of my Bitcoin, and that hedge is now at break even. So if we get back to 109, I will remove the hedge for no loss and no profit and leave my original long position on. My original long started in the 70s, 74, 78, added some more in at the 80s and in the 90s and in the hundreds. And I've kept on holding those, occasionally hedging when I've seen problems approaching, like we did this weekend. And luckily I had hedged, or at least taken some profit on my Bitcoin before that massive collapse. Now, I am aware of you, and I'm not going to talk about Bitcoin and crypto too much because Paul will be covering that in the subsequent sessions this week. So pay attention to those. Paul is a crypto expert. He knows what he's talking about. If you want to know what to do with your Bitcoin and your altcoins like Ethereum, XRP, Solana, and some of the miners, I've only got a few here, ADA, Uni, LTC, Litecoin, Link, but I've got a whole bunch of other ones as well. And I'm sure many of you do. So Paul is the one to watch. He's the expert. I am not. I'm mainly involved in Bitcoin mostly, and a little bit of Ethereum, XRP, and Solana, and a few for shits and giggles in my wallet, in my Kraken wallet. Only a little bit of money, about 20,000, packed full of weird coins that I know nothing about, and that's a gamble. I don't advise you to do it if you value your money, but that's a bit of a gamble for me. All right, I don't gamble with my serious and real money. Let me just tell you that. I do not gamble with Bitcoin. I don't gamble with Ethereum. I don't gamble with stocks. I don't leverage most of the time. I hardly ever use leverage. So there we go. Now let's go back to metals. I want to talk about what's going on here. Gold, I'm short across the board, full disclosure. Gold, I'm short. We got short on the breakdown through the trend line. These are all 4-hour charts. I think we've got, let's go to the day chart. I think we've got 3 or 4 lines on the gold day chart. And I think we're going to visit the one in the middle, almost certainly, the red one in the middle here. This is the red longer-term trend line. That's where we broke out of that big ascending triangle, and we've never looked back. We've got to get back to that triangle at some point. I guarantee it. And so, you know, that's back down at 3,500. We're now at 4,500. Not quite, but almost. I think we'll stop at 4,000, the big round. You can see there's some hesitation there on the way up at the 4,000 level. We're at 4.3 something right now, breaking down through the first steep angle trend line. Let's look at that on the 4-hour chart. And when I say the first steep angle, it's that 4-hour trend line that we broke down. The moment we broke down, I got short. All right, so we're short on gold. Now let's look at the bigger picture. How far could we go? Like I said, I think we've got to get back down to this big breakout triangle. But in between there's a little baby one there, and there's the $4,000 level. And of course, we've got these moving averages coming up underneath us. I think we have to get back at some stage. We're going to get back to the 200, the purple one all the way down here, but that'll be rising up in time to come. And give it, 3 months, 6 months, a year, and the 200 will be all the way up at, 3.5, maybe even 4,000. So this is beginning to rise rapidly, as all the other moving averages are. They're very important, these moving averages. They're not just there for no particular reason. They're incredibly important. And what they will do is give you very clear support and resistance levels. Now, I think we've got to get back down to the red one. Don't know how long it's going to take, but I'm short. We've got to start. We're in profit. And so far, so good. If we get an even deeper dip, which gold is prone to do, don't be fooled by this big rally. Gold often, it can do some damage to trading accounts, as you can see here during 2021. And I remember this very well because I was buying the dip at about 1650. And we got down to, we got down to 1620. So I was already under a bit of pressure, but we got a triple bottom, and we were talking about triple bottoms on MSTR. Whenever you get triple bottoms and they confirm, they're incredibly powerful. And we got one there on gold all that time ago. And that trend line is the one that I think we've got to get back down to. So that's gold. I'm short. And then same with silver, basically. I'm just using gold as the first gauge but I think the other ones will fall faster than gold. So silver, probably platinum, the thinner traded, maybe platinum and copper actually, probably platinum. We're short on platinum and copper and silver. So I think we'll go platinum first and then maybe silver and copper together. And then gold will be the last or the slowest to fall down because there's so much hype. People are buying gold by the fistful at Dollar Store General and places like that, in maybe not in the US, but certainly in China and places like that, and India. So yeah, interesting. I'm short across the board. I think we can have a much bigger correction here. And my thesis is that as we enter this inflationary bust, boom, bubble, that the main beneficiaries will be risk assets, and gold is not one of them. Maybe silver, maybe platinum, not so much platinum either. Maybe, and copper, not so much maybe. But maybe silver will be okay-ish compared, I'm not too sure. But I think the very precious metals, or the precious metal like gold, will be the last to fall if it does at all. But I do think that we'll see a move into more inflationary bust-up type risk assets, including stocks, crypto, and maybe some of the commodities too. Now let's go to natural gas, talking about commodities. And I said I was going to do a brief scan. We've already done half an hour. I said I was going to do a brief scan and then come back to the charts, but we've been stuck on the charts. Let's go to some of the questions while I take a breather and I take a Red Bull sip, and I'll read through some of your questions while we're here. All right, so yeah, MD, you really like Paul's crypto analysis? Yeah, I do too. It's fantastic. Absolutely. What ETFs, Jazz, with ETFs coming, do I see XRP? I don't know where any of these are going to, Jazz, but I'm long on XRP. Let's go back to that chart. Quickly, we'll come back to natural gas right now. XRP, I don't know. I'm long, I've got a stink bid back down at $2, by the way. My long positions are really at about 260. I've been holding, I have not released any of those positions, and I actually will consider adding some more, probably today, actually, a little bit later on. We're holding that channel line, even though we dropped down below it with that big sell-off on last Friday, and we're holding the channel line. And I think if we do actually just basically follow a breakout, we probably just go to the next level. So if we take a channel, that pink channel, and duplicate it like I've done already, and do that again, just for a start, that should take us up to about, I don't know, $5, something like that. If we just make another channel on top and we just ledge up every time, it's not going to play like that, of course, but if we imagine that, $5 is certainly very easily achievable, but I think we could get much further. I don't know. I'm not an expert in all of this stuff. Crypto Paul, who will be on this week, will tell you more about that. So make sure to subscribe and join and do whatever you have to do to make sure you get the info. It's not up to us to encourage you to do this, folks. If you want to, you got to forge your own way ahead, and make sure you get hold of the information that's useful to you and get rid of the information that's not useful to you. If you find this information useful that goes on this channel, then subscribe, join, pay for whatever you can. Make sure you get the most of it. If you don't think this is useful, go and find another place that is better or more helpful to you. Good day, Sean. Yeah, so James, you mentioned Friday that natural gas is going to 375, but I believe you have shorter term goals. Are you taking profit at $3? Can you explain your short and long term goals? Sure. I'll get to that right now, Mark. And I'm just going to get through some of these questions. Paul's content is fantastic. You're right, Emily Trading. Learn to earn. Missing you too. Learn to earn. Although you may have changed your name. I don't know exactly who you are, but I miss you too if you've been around a bit. Scott Montgomery. Nice to see you. Good Scottish name. Starting with Scott. Hit the like and subscribe, folks. Thank you, Emily. I appreciate that. Jazz, what are your reverse carry trade? Ah, yeah, the carry trade. The reverse carry trade. Yeah. Manatee Orange. Staying away from NatGas. Brokers quoting 364 and everyone's at $3. Yeah, you might be on the next contract, Manatee. Check which contract you're looking at. I think you may be looking at one of the forward contracts on natural gas. Are you feeling good and re-energized, TC? Yes, sort of. Maybe not. I'm trying my best. I think fatigue and tiredness comes and goes, and so you've got to deal with it when it's around, and when it's gone, it's gone. It's good, and then you can get on and be a little bit more productive. Good day, Somnath. Nice to see you, Somnath from India. Lovely to see you. All right, I know who you are, Somnath. So anyway, folks, let's get back to the charts, and I'm going to carry on, and let's go on to natural gas, because I think it's really important that we understand the bigger picture here. I think, again, as I was saying, with this inflationary bust up or boom that I think we may be entering, it's not going to be only asset sort of risk assets like crypto stocks, particularly the tech stocks like AI type stocks and treasury, dare I say, crypto treasury stocks like strategy, but it could also be things like energies. And inflation affects everything. Inflationary booms affect everything. It could also be things like these softs and grains. I've got sugar, cocoa, coffee, soya, cotton, corn, wheat, orange juice. I'm out of many of these now, but I've got some longs on some of these. And the same about energies. Could we see a bump up in energy prices? My general thesis on natural gas is that we're actually entering a higher range. We're right at the bottom of that higher range at the moment. Let's go to the weekly chart. And what we have here is a very, very large, if my charts will load, a very large bullish bull flag. Although it's taking a little bit too long, but if we sort of squeeze it in like that, it doesn't look too bad. And you can see that for most of the last couple of years, we've traded under $3, closer to $2.50 to $3 range. And I think we're now moving into a higher range, not only because of the inflationary nature of this boom or bubble that we may be entering, but also because of the nature of the bubble, because this is a tech bubble. It's based on AI, data centers, Bitcoin mining, everything to do with computing and AI. And also, our energy needs are just generally increasing. As we become more energy addicted, we're going to use more and more energy. And unless we can replace that with sustainable energy, which we can to some extent, we're going to have to drive up the prices of what we've already got. And natural gas is one of those primary, what they call sort of intermediate energy sources or stopgap, the transitional energy between burning oil and coal, filthy, natural gas, better, cleaner. But we have leakage problems with methane destroying the atmosphere and creating methane global warming, initiated global warming. But it burns cleaner and better, and it's quite easy to get hold of, and there's loads of it around. And then there's, of course, nuclear and other forms of green energy, which I think is probably the most sensible way to go, actually, nuclear, as many other countries are already doing. But I think natural gas has got a place in this, and I think we're going to be moving into the higher range, and it could be somewhere between $3 and $4, or it could even be slightly higher, between $3.50 and maybe $4.50. Right, having put that picture in place, we're now trading at the upper end and above the center line of what I think is a bull flag. This is the weekly chart, and you can see my long positions here on the weekly chart. Let's go to the daily chart and zoom in a little bit. And on this daily chart, you can also see that we have yesterday, Friday. I keep on saying yesterday, feels like yesterday. Friday, we had a piercing pattern reversal candle. A piercing pattern candle is a two candle pattern. The second candle, the first candle needs to be bearish, a big bearish candle like we have there. Let's zoom in a little bit more. Big bearish candle. The next candle needs to go lower and then close more than halfway up the bearish candle preceding it. So this next candle, the white one on Friday, went lower and moved more than halfway up the preceding black candle. That is a piercing pattern reversal candle pattern. And normally it would lead to a higher price or a move higher on the next day, which is shortly, today. In a couple of hours' time, we start. So let's have a look at the 4-hour chart. This is the chart that I trade off mostly. And we have a megaphone at the bottom. We got to my blob. You've got to give me that, right? We did get to the blob, but we didn't bounce out of the blob quite. Although, if I move the blob along without making it higher or lower, it's pretty accurate. So instead of bouncing out immediately, my blob provided support a little bit later on. My blob has got nothing to do with it, of course. Let's move it back. It's just what I drew for fun. But there we go. Let's get rid of it, actually, because it's a little bit distracting. So what we have here, you can see my long positions, one from there, one from there. And what we have here is a megaphone or expanding or broadening pattern, which is a reversal pattern. And it's occurring at the bottom of a sustained down move on this 4-hour chart. In fact, if we look on the day chart, you'll notice that we've got multiple bear candles. Come on, load up. I don't know if it's me multiple bear candles, 1, 2, 3, 4, 5, with a couple of doji candles in between. So 5 bear candles, that's quite a lot. When you get to 5 and then 7 and then 9 and then 13, those are the numbers that I always watch with sustained moves. You can see it to the left here, 5 down and then a bounce, 5 down and a bounce. So just that's a by the by. But we're bouncing out of the megaphone, out of the 78.6 Fibonacci level with a piercing pattern reversal candle here on the day chart. Let's look at a closer view of this on maybe the hour chart, and you can see how beautifully this traded. I looked at this on Friday with my other group at where I do some consulting work. Don't know if I can mention the name here, but I was talking about this move down on Friday. These are hour candles, and look at that bunching up. This was very, very late on Friday before. Actually, it was early in the morning on Friday, late on Friday night or Thursday night, my time. Tiny, tiny, tiny little full stop candles, ending with the two tiniest candles right at the end here, and then the reversal candle. We got long a couple of hours later when I woke up the next morning. So, and we're still long. So that's it, folks. I think that looks beautiful, and I think we're going to carry on moving up. We've got a lot of work to do to get through some of this traffic above us. We're entering the most highly traded zone on this 1 hour chart, and on the 4 hour chart, we've got some traffic above us, particularly the 200 and the 50-period moving averages just above here at about 313. Now, your question was, what is my target? Am I aiming just for $3, or am I aiming for much, much higher? I'm still aiming, I still have 375 in mind. And let's go back to the day chart. I'll tell you why. 375 is kind of a pivotal point for natural gas. It's this big line in the middle of the screen, the big red line, or brown, or it is red. No, oh, when I hover in it, it's red. So that big red line in the center there is the 375 level, and it's kind of a pivot point. When natural gas gets there, it will often, from the underside, will often reject downwards for a while or reject completely. And if we go through it, it will act as support and probably retest it from the top and bounce out of there again. So it's a pretty key level. And if we manage to close above that at any point, I think, although, on the previous occasions, we didn't do all that well, didn't hold above it too long. But I think if we can get back above that level once more and begin to hold that level, I think we'll move up into a sustained range. Maybe we won't hold 375, but certainly $3 where we're currently trading. So $3 to 375, maybe the immediate range. And then if we get a bit of a further bid under natural gas, if there is some reason for it, weather-wise, war-wise, transport-wise, Henry Hub breaking down again, whatever, we could get this pushing up into a much higher level. And of course, we've got heating season rather, coming up soon. So yeah, I think I'm pretty positive on natural gas, and we'll see how we go. But it's looking okay, and particularly the way it's bounced out of there with that piercing reversal candle pattern. And on WTI oil, I'm now out of this. I have no trade positions. You can see the absolute bonanza that we've had here. We've been trading this like crazy. These are all short positions that every single one of them has been profitable, and we've had 3 long positions. Every one of those long positions was profitable too. This has been 100% win rate on this page, which is fantastic. Not many of my instruments have 100% win rate. In fact, I don't think, and I will have some losers later on, I'm sure. But this has been a very good overall play, and we're now out of this trade, having reached the previous lows where I bought on the previous occasion. Now, it is possible that we'll bounce out of here. These black arrows at the right-hand side are not buys, these are exits, right? So I took all the profit of those shorts down here, a little bit there, and then the rest a little bit later on Friday. So I think we could bounce out of here potentially all the way back up to the orange block. I haven't taken a long trade on here yet, but I might consider it if we get some sort of signal or some reason to do it. And I think we could then get back up into the orange block, which I called Moab, the mother of all breaks. If you've been following me for some time, you'll know exactly what I'm talking about. So I won't go through it again, but that's the key level that we broke down through. We got back above it for a while, and then we're back down below it right now, right down here. I think we could get down to $40, and I think we'll then bounce out of $40 and faff around in the sort of mostly $50 to $70 range, probably for the rest of this year. I don't think we're going to easily get below 40, and I don't think you're easily going to get above 60, 65, something like that. So that's WTI oil, and I might consider taking a long position on that later on today, or maybe I'll just give it a wait until tomorrow. We'll see how we go. Now, I think that's covered energies. I will come back to any questions, folks. So if you've got any questions and I missed your question, you can make sure your question is highlighted by using a super chat. The dollar button on the chat thing there, just to make sure I can see it. Just put in a super chat for $1. Right, Keith, nice to see you, mate. Tanil, right, let's get a couple of questions. We'll carry on. URA, we're going to talk about URA. Okay, Keith, let's go on to URA. Closed out URA at 42. Was hoping to re-enter, but it continues to climb. Same with lithium, LIT. Any comments? Yeah, let's go into, we're on the energies page anyway, so let's have a look. So URA, UEC is the same. I've got, similar view on UEC. If you've been following me for any amount of time, and I know I haven't been around for the last few weeks, but I'm back now. And like I said, if you want to watch my videos, if you want to, join me on a Sunday night at this time. Every Sunday I will be here and it's open to the public. If you would like to watch even more of me, you can watch me on a Wednesday too. But for that, you need to be a member of this channel, and you can click the join button below this video to become a member for $1. And you can get access to all of my Wednesday videos, plus all of Crypto Paul's videos, which he does 3 times a week. So you can get all of that for $1, or you can just get what you get for free. It's up to you. So make sure you just get the information you need and that you want, and don't pay for junk. And if you think this is junk, don't pay for it. But if you find it useful, make the best use of it that you can. So we got long here at the bottom, where I said long here, and we got out where we started selling at these red arrows. So long at the bottom, and I stopped, took profit, reversed over here, and prematurely, obviously, as you can see. These are not large positions. I haven't just added all of that back on. I've added very tentative small positions, looking for this to top out at this channel line, which we didn't do. We broke up through the channel. We tried twice, and the third time, this is the day chart, last week, we broke up through the top with a gap. We've gapped back down into the channel again. I think we've got a good chance of this moving back down into a much lower level. Uranium has a habit of getting people trapped to the long side and then collapsing. Do you remember this? Do you remember that? I remember we got long and then we got out at the top because of the problem with uranium collapsing like it does occasionally. It's a thinly traded instrument, and it doesn't have a lot of customers, and they're all sort of slightly strange. So yeah, that's the way it is. So uranium, dropped all the way back to down to $20 and just stayed and stayed and stayed and stayed. And now it's surged up all the way up to this level. But we did get up there first of all and had another massive collapse from 34 all the way back down to 22 multiple times. And again, from 34 all the way down to 20, almost like a 70% collapse. And then that's where we got long. Of course, on the massive dip at the point of maximum pain, we got long. We're now short, I think, at the point of maximum pain for the long side. Although we got long, we got short prematurely. These are small positions. I've still got some space to add some more size, not much, but a little bit. And hopefully we can ride this back down. Same with UEC, same sort of pattern, exactly the same thing there. Another play that I have on is actually, while we're here on this page, is XLE. And despite the fact that natural gas and oil have come down in price quite significantly, I think XLE still has a chance of moving up, towards the end of the year, from about 85, where we're currently trading, holding the channel center line. Weird little channel. It's not really real, I suppose, but we're below all the moving averages here on XLE. This is the energies ETF. If we can break up through there and hold above the moving averages, I think we've got a good chance of getting all the way back up to 98, 99, and then probably above 100. So that's the XLE ETF. And if energies get a bid along with commodities as we enter what might be an inflationary boom or bust or bubble, we could see all of this stuff moving up along, including softs and grains. Now, I've got out mostly from these because I'm now allocating quite a lot more of my money into the risk assets that I was talking about earlier, like MSTR, like Tesla, like NVIDIA, like QBTS, AI stock, like crypto, some of the altcoins, and I'm moving out of some of these softs and grains. However, that might be premature as well, because although we're long, for example, on sugar, and this is not going particularly well, you can see my long positions. That one, I think that one's now closed, but from around here, certainly well above where we're currently trading, Could sugar benefit from a rally in risk assets and inflationary boom and break out of this slump that it's been in for so long? If the oil price picks up, we could see the sugar price move up as well. Bear that in mind, because oil and sugar prices quite often related. And then maybe we can see things like wheat, which has been doldrumming for ever and a day, making a triple bottom, really. Let's make another clone of that. Clone that one. So this is wheat triple bottoming this sort of ledge here over there and bouncing out in what looks like a falling wedge. Could wheat benefit from this? I think it could. We're still long on wheat, and I think this is my idea for wheat, something like that. We may have to get further down, but I hope not. Still long on wheat, still long on sugar, but I've exited some of the other ones. We were long on soya. We've taken profit on that one. Had a nice bounce out of there. That was my long position on soya. I'm trying to get out of some of these softs and grains and beans, including coffee and cocoa. I'm out of these now too, and moving that money because I don't use leverage very much. So I try to allocate actual money to my positions. So this money that have had tied up on these very miserable, droopy softs and grains, I've now taken out, and I'll be allocating that money to other risk assets. Yeah, I want to talk about one more thing while we're talking about, this is, I think, the most interesting chart that you'll see today. And this is the Bitcoin gold ratio. Let's look at this on a much broader picture. This is the weekly chart. Bitcoin gold. Now, what am I looking at? Yeah, this last portion here on the weekly chart. And I'm going to draw for you what I think this is actually forming. And it's actually an ascending triangle. It's difficult to draw, but I'm going to try something like that, right? Yeah, it's not the best, is it? But something like that. And I think that's what gold Bitcoin ratio is doing. We've seen gold going absolutely, dare I say, and use the term apeshit. It's quite a good word, but it might be rude or considered rude. But I think if we can get this breaking out through there, then Bitcoin against gold is going to fit into this overall theme of moving out of sort of risk protection assets like gold, like the Swiss franc, even the US dollar, into things like, and gold, yeah, in gold, into things like Bitcoin and so on. I think we could see this ratio start to move much higher and move up through the top of this. Let's have a look at the day chart. And actually, I'm going to get rid of this big picture. I want to show you why this chart's so interesting. On this week chart, we broke down through the support level, and we bounced out of it and closed above the level on the Bitcoin gold ratio. In other words, Bitcoin did not fail its support against gold. Crucially important. The idea that Bitcoin is digital gold, or that gold is digital analog Bitcoin, or that they're somehow in cahoots, or that they're married to each other, or that they're similar, plays into this whole picture. But you know, what happens when the shit hits the fan? What happens when there's a risk-on environment? Bitcoin should suffer, but Bitcoin is not suffering against gold. We're in an uptrend, and we're looking to break out through the top. I think that we're on the cusp of this breaking out, and when it does, that could be the sort of trigger for Bitcoin to sort of really get going. Looks like we've broken down through the trend line, really, but I'm just going to put a broad trend line on there, encompassing some of the lows to the left, a much broader sort of, you know, not great trend line, but something like that. And it looks like we just sort of held it, and we are in an uptrend in the Bitcoin v gold ratio or asset. I mean, you can trade it, I suppose. I don't know where you could trade it at ICE. So super interesting. Now, I need to get some of your questions. That was URA, and I left that on the screen. I apologize for that. Crude oil, now that Israel and Hamas break the ceasefire overnight, do I expect a spike in crude? Yeah, possibly, actually. That's a good point. I didn't, I don't know what's going to happen in Gaza, but let's have a look at that chart. Where is it? Here we go. But one thing we do know for sure is that gold is at support. And we also know for sure that Friday's candle was a star doji type candle, or a hesitation candle. It didn't move down. In fact, we closed slightly higher than the open on Friday. So yeah, war in Gaza, I don't think it's going to affect the oil price all that much. I think there are much bigger concerns regarding OPEC Plus and Russia. OPEC trying to get the price down, Russia trying to keep the price afloat. I think that's more of the story here. And I don't think a few missiles going, and I'm not being flippant about Gaza, please don't ever think that, I'm not at all, but a few missiles lobbed around in Gaza is not going to affect the oil price all that much. It does affect, has a significant effect on human morality and the way we all live together, but not the oil price, probably. You know, the good thing about being an old man, and I'm now almost 60, I will be 60 very shortly, is that you can talk about things and get away with it, and you can be like a grandpa, and people don't mind too much. So we can talk about, we can be grandpa-ish, which I like. All right, so let's carry on. Crude oil, Israel. We talked about Israel and crude oil. Jamie, I haven't been called Jamie for a long time, Umkar. Thank you, I appreciate that. Usually natural gas tends to move up during this time of the year as winter months are nearing, but this current correction is an opportunity to make a long position. Can you explain seasonality? Yeah, of course, Umkar, when weather gets cold or incredibly cold, as it does in most of Europe and Northern America, heat has got to be turned on, and houses and buildings are going to be warmed up. So there's more demand for natural gas, and that pushes the price up. Yeah, but that's not the only factor. There are all sorts of other factors affecting the price of natural gas in the supply-demand continuum, and this is just one of them, weather or the seasons. So, and by the way, natural gas in December, everyone says December's coming, natural gas price to the moon. I hear it every single year. December's coming, natural gas to the moon. December's coming, natural gas. And when we get to December, guess what? Natural gas normally drops in price. Now, I did a study on this a couple of years ago. You will have seen it on X if you were following me back then. I think out of the last 20 or so Decembers, we've 60% of the time we've finished lower than we started the month in December. So don't be fooled by the December season. The word on the street is that the US economy is soft, and with Christmas coming, oil and gas are going to be pushed down, and this will squeeze Putin financially, forcing him to end the war. Well, I think that's the idea, is to get the prices down, but I don't think that's going to be all that successful unless OPEC Plus and Russia's very intimately involved with all of that, and depends on their relationship with Russia, OPEC Plus, and the other countries that either want the price to go up, OPEC countries and associated countries who want the price to go up, and there are those who want the price to go down. And so, I don't know how that's going to work out. Who knows? I don't think the US economy is soft there. I think everyone thinks it's soft. And I think we're going to see a big spurt of retail traders being left behind and potentially shorting a massive bull market, whilst the institutions are now starting to leap on board. I think that's more likely, and that we're going to see a massive blowout in the economy heading into the end of the year, and possibly even spilling over into next year. So don't make assumptions about economy going soft and blowing out and all that sort of thing. Don't do it. Follow the charts. Follow the charts. Let me show you the charts. Let's go back. Let's see if have I got the charts? Yes, I've got the charts. Let's have a look at the charts. What are they telling you? What is the NASDAQ telling you? What is it telling you? It's telling you that we've bounced out. We have a massive swag breadth thrust with a potential 20% further to go. It happens every single time, 10 to 20% rally after that sort of pattern. It has never failed. Admittedly, it's only been 4 occasions prior to this. So statistically, I always laugh. Every single time. How many was that? Well, it was 4. That's a lot, right? No, it's not. You've got to have 30 things happening to make, 30 events to make, or measurements to make a statistically significant assessment. So when people say, Bitcoin cycle, it's a 4-year cycle. Well, how many cycles have there been? 4. Okay, I rest my case. So yeah, what are we seeing here? We've just had another mini breadth thrust. This little move down here is a mini breadth thrust, and we should see a rally at least equal to the height of that candle. So let's measure it. I'm not saying this is, and folks, everything I say here is what I think. It's not actually what is going to happen. It's what I think might happen or could happen or will happen. Doesn't mean it's going to, and I get things wrong as many times as everyone else. I'm trying to draw a line here now. I'm going to choose an arrow. I've been offline in my own private group for so long that it seems like I've got way too much to say now. So let's just draw that line there and copy it and stick it on the end of where we are at the current moment. And that should be more or less where we, at the minimum, where we end up. So let's clone that and stick it on to there. Let's just add the breakout level. It's probably not accurate anyway, but something like that. And look where it takes us, straight up to my blob and the 200 period Bollinger Band. I didn't even know that. I've just done this on, impromptu in the moment. I've not done this before. Never drawn that line in before, and it takes us right to where I think we're going to go in any case. So yeah, don't be fooled by these retail traders and YouTubers and thumbnails that say we're doomed, market crash, it's all over, we're dying, we're dead, market's dropping 40% next week, it's all over, crypto's dead, everything's dead. Don't believe any of that. It's not true. The dollar's dead, the dollar's doomed. Don't believe that. It's not true. Follow the charts. These charts are all incredibly bullish. And despite all this messing around this last week, that's just finding its feet after a massive thrust down that affected all the markets, crypto, metals, everything else. Metals went up, of course. And so we're just finding our feet here, but not dropping down and not collapsing. If anything, we're looking aggressively towards the upside. So that's what I think is going on. And, but if I'm wrong, I'll find out soon enough. You've seen natural gas go down in November. Sure. And Roby, the US economy is fine. There we go. Thank you, Roby. He lives in Washington. He should know, right? Washington, when DC is bad, the rest of the USA is flu. We're fine. Yeah. Now that you've got cops on the streets and the army cleaning up DC, maybe that's part of the reason. I'm joking. I don't know anything about it. I don't live there. I don't know what's going on. So take that with a pinch of salt too. All right. Something counting chickens, something. Yeah, exactly. Something counting chickens, whatever. All right, now folks, I'm going to scan through the charts one more time. I do want to go back to crypto because we are live on the crypto markets. Let's have a look at what's happening on Bitcoin. The rest will follow, but I do notice with great enthusiasm that XRP, I noticed this morning, actually, I've been watching this chart the whole day, and the first things that moved this morning, the very first moves, was not Bitcoin. It was Ethereum, XRP, and Solana. Then Bitcoin started to get a bit of a bid, and then some of these smaller alts underneath. So they all move together more or less at different rates, of course, but more or less at the same time. Now this is Bitcoin. As I said to you, we have bounced out of that 78.6 precisely after the sell-off, not the Friday sell-off. This was not the sell-off. That sell-off was over here, where $20 billion of Bitcoin or crypto, not Bitcoin, correction, crypto in general, probably mostly alts actually, because some of them fell almost to zero, was liquidated. $20 billion US dollars taken away. Mostly leveraged, it seems like leveraged traders, and we've now got to rebuild. And that big move was that move down with a gap last weekend, not this one that we've just had. And then during the rest of the week, we dribbled down further. Now, I'm going to be talking in one of these next sessions about the Quasimodo pattern on Bitcoin. And the Quasimodo pattern, all I'm going to do right now is encourage you to go and Google it. Go to investopedia.com or one of the other sites that give you free pattern analysis and instruction. Look up the or just put it in ChatGPT. Look up the Quasimodo pattern. And I just had a chat this morning actually with one of my former employees who's a crypto trader. And he was telling me about this Quasimodo pattern on Bitcoin. And essentially what it is, it's a failed head and shoulders, which reverses in the opposite direction to what you think it is. So an inverse at the bottom, so a head and shoulders at the top. It's normally a reversal pattern looking to move down. We break the neckline and start moving down. That's normally the trigger or the confirmation that the head and shoulders pattern is in place. But the Quasimodo pattern breaks the neckline and then bounces up and reclaims it and closes above it and moves up towards the previous high where the head is situated. Now, I'm not going to go into it now. I want you to look that up. When I speak to you next time on Wednesday or Sunday, only for members on Wednesday, please join the channel. It's $1 a month or $2 a month. There's a join button right below the video. If you appreciate this sort of info, and if you're looking forward to Crypto Paul's crypto analysis, which is fantastic, make sure you spend $1 it's going to cost you. You won't even notice it, but it may help your trading significantly. And maybe you don't want any help in your trading. You know what you're doing. That's perfectly fine as well. Maybe you're just here for the chat. That's also cool. So Quasimodo pattern, I think that there's something in what he says. It's a failed head and shoulders. We're talking about this low here, failed head and shoulders. You can see my lines, the red squiggle, the green, and the green. Head and shoulders, right? And it's failed, but now we're bouncing out of there. So that's the sort of pattern that we were talking about this morning, just out of interest. But I think we're bouncing out of it beautifully. We're above the 200-day now. That's this purple line. We're moved above it. And if we can just get up into that zone, back to the old familiar 118 and above there, I think we'll move up to the top of the megaphone. The fact that we failed to get to the bottom of this is really important, folks. The fact that we've so far, and we may still have to do it, and I'm not ruling it out at all, but the fact that we failed to reach the bottom of the megaphone is a very bullish pattern indeed, particularly that we have a spike low through the channel center line and the 200-day moving average here on Bitcoin. The rest will follow suit at various different rates according to the way they trade and their use case and hype and whatever about each one of these alts, but Bitcoin will be the leader. And folks, I think that's more or less what I've got to say today, unless there are further questions, and I'm sure there might be, so we'll come to some of them. Welcome, Keith says, welcome back. Rejoining. Thank you, Keith. Much appreciated, mate. There you go. Keith's the first one to come back to our fold. Thank you very much, Keith. I'll see you on Wednesday for the members on this YouTube channel. So it's great to have some of the old guard returning, which I really like. Moab. Yes, Moab. That's the one. All right, folks. And unless there are any further questions, I think I've covered almost everything I wanted to say. Here's a comment from TF. Israel strikes Gaza and halts aid, accusing Hamas of attacks. Yeah, so I was watching this just before we came on stream, TF, and it seems like there have been violations on both sides of the yellow line, and that Israel is striking Gaza again, which is absolutely horrific. Horrific, horrific. It's a bit like the crash on Friday, last Friday, not this last one, the previous one, a bit like the crash on Bitcoin that took out 20 billion from the market and liquidated 2 million with an M, retail traders. And then this week, the very next week, we dropped even further. And that's what that's like in Gaza, 100 million times worse. So, dropping down further, more pain, more misery, more suffering, like Bitcoin. So there you go, folks. My best wishes and love and prayers go out to everyone in Gaza tonight, and let's just hope it's quick and they stop the fighting immediately. I really hope so. All right, folks, have a wonderful Sunday evening. I've given you my best. I probably haven't answered everything that you came here to find out about, but next time I see you, come prepared with your questions. And if you'd like to see him on Wednesday, folks, I will be here for a new session. I'm not quite sure what format. It'll either be a video or a live stream, or I'll be on with Paul. And Paul will be on throughout this week as we trade the altcoins and the crypto stuff and Bitcoin. So I'm looking forward to that. Quickly glancing at my notes to see if there's anything further. I'm just going to read through my notes here just to give you a brief idea of what I'd written down, which I'd never got to. Stocks are ripping, frothing at the top a little bit, but still ripping. Golden metals, exponential blow off top, perhaps. I'm short. Bitcoin finding space. Does gold need to fail first? I was watching the Digital Assets Conference in, I think it was in Cyprus. I'm off to Cyprus myself, actually, in a few days' time. I think it was in London. Digital Assets Conference in London. And I was watching some of the comments there, and generally very bullish and very optimistic across the board. Of course, they would be, because they're all Bitcoiners and crypto people. But what they said made a lot of sense about the sell-off, the manipulation, the liquidity building up, and we're ready to go. So everyone's pretty excited about it. And some people are even saying that this rally, and I don't believe this, or I'd be glad if it's true, but that this rally that we're about to enter on cryptos and Bitcoin specifically is going to be the biggest to date. Now, that's a broad and big claim, but it's been made by about 2 or 3 people at the DAT conference in London this weekend. And I think there's a conference in Cyprus coming up as well. So yeah, so dollar, what's going to happen with the dollar? I think commodity currencies are worth a look at, Aussie, Loonie, and the ZAR. And then the commodities, softs and grains. Are we seeing, if we do see an inflationary boom, I think we'll probably drag many of the commodities along with it, including potentially energies, but also the softs and grains. So look at things like wheat and sugar and cotton and corn. I like the grains particularly. So corn and wheat, I think, are my two favorites at the moment. And then potentially sugar as well with that big falling wedge. And the overall thesis is fiat currency collapse, a gold bubble as a result. Maybe gold's got to pull back a bit. And then we're going to swing back into risk assets, I think. Out of gold a little bit, but don't give up on gold. It's not going anywhere. But into Bitcoin, stocks, maybe even the US dollar, and a couple of other things, maybe some of the commodity currencies like the Aussie and the Loonie, as I said. All right, folks, have a great evening, and I'll see you next time. And I'll see a lot of you on Wednesday, only those who join, clicking the join button below the video right now. But if you don't want to join, at least please subscribe and click the like button. I'd much appreciate it. Have a great evening. I'll speak to you soon. Take care.